Welcome back to Primary Source China Investment. We're on show L. Peng.guo and I are happy you're here. Please leave your comments, hit the subscribe button. You know the deal. Today on China policy, we're talking about China's strategy. The where is China, where's it going, and how does it want to get there? One of the first books I've read on strategy out of business school was called The Discipline of Market Leaders. And the reason it's such a memorable book is because it's quite simple. There's only 3 strategies, and great companies have to dominate one of those 3. And those 3 strategies are price, innovation, or service. You have to dominate one and not forget about the other 2. And I was thinking, what if we turn that onto China itself? Because there's been a lot of talk about China moving up the value chain. So where does China want to go from a top-down perspective? And of course, there's a lot of private companies doing their own things on the ground. But when we hear about China 2025, Belt and Road, dual circulation, the top-down approach does have meaning. So I'm thinking, what companies are going to benefit going forward in this transition period that China's in?
China government played a very important role in the economy. They figure out the whole yield plan and the objective for the economy. For this year, the GDP increase rate is set up at 6%. That's the objective of government. So after that, the all level of the government, they take the actions and how to implement the work. It works like this way. But from market and from a company's perspective, as long as the society have such a kind of the economic goal, it works like this way. China have many state-owned companies. They play the important role in the economy. They take the dual roles. One is just compete in the market, and the secondly is more like the social responsibility. So it's redistribute the social wealth to the different area. For example, like the poor area, they don't have the electricity, they don't have the internet. The only state-owned companies to provide such kind of a service. Right. And so almost 60% of the Chinese people rely on the state-owned provided service to doing that. In the market, it's really highly competitive because no matter you are the a private company or state-owned company, for the specific deal or business, it's really the each one use their own advantage to try to get the profit and in the market.
Yeah, going back to the initial impetus for a lot of the growth of China was cheap China, right? Labor was cheap, distribution was cheap. So a lot of foreign firms and Chinese firms sprung up in order to meet that need. And now, as we continue to move forward, the labor costs have gone up, distribution costs have gone up, shipping costs have gone up. It's still very far away from the rest of the world. So a lot of these factories are rethinking their strategy. And if China, from a top-down perspective, you know, this dual circulation that we've talked about a couple of times in our shows, if China really wants to be a leader in innovation, they're going to have to move, again, back to that strategy talk, they're going to have to move from the low-cost provider into the innovative space. And to me, that's a very hard leap. I mean, just look at electronic cars, for example. China is the biggest market for electronic cars. It's been a government policy and a government initiative for at least a decade, and China still hasn't produced anything near a Tesla. And yet Tesla operates on the ground in China. So, you know, on a lower technology, look at bicycles. China's the biggest bicycle market on the planet, and the biggest bicycle maker is not Chinese. It's actually Taiwanese. It's giant. So can China really get up that innovation curve?
Honestly, I think it's very hard. So absolutely very hard, because this is a systematic work. It's starting from the education, from the kindergarten. So
right. So competition.
The innovation is really, they have the many different ways. They might not like the big or fundamental change, but from the capacity, manufacture, business process, there's a lot of the small innovations in those areas.
Yeah, the other thing I did notice was some of the high labor intensive businesses and production is actually declining, or at least increasing at a decreasing rate. You know, textiles is one area, and then a lot of the foreign firms or even the local firms are thinking, well, where can I outsource? Maybe I go to Cambodia or Thailand or Vietnam for production. So, those kind of labor shifts are actually happening. And, we're also hearing the graying of China. Maybe the labor force is actually going to shrink at some point. So there's a lot of micro elements and a lot of macro elements that are coming into play when we're discussing, where is China going on the creativity front. And I don't think the last part of that strategy, just to sum it up, the last part, which is service. I'm not sure that there's a lot of Chinese firms that people are begging for Chinese service. I can't quite think of any China brand that is high on the service level.
Yeah. For the service level, right now, especially for this year, China government really set up the reform government functions. The basic line is that I don't think the government have the knowledge or experience to directly participate in the business decision. They are more like the influence the business decision, but they have the strategic goal to do it, like the Shenzhen. So they try to improve the high tech related business. So they might have some policy to reduce the rent, tax advantage, and if you bring people, they might give some benefits to look at. So my personal experience is more like from a service perspective to help out this companies. But if you win or lose, you have to really based on your own business product or service. For the large company, they really like for example, in the financial world, I'm very familiar with that. Each big name or big firm in China, they really like the platform. There's a lot of the small technology company, private fund or service provider, they are absorbed in that big platform, and then they form the supply chain to provide a service to the final client.
Yeah, nobody's looking at ICBC as the innovative leader in technology or in distribution.
That's exactly right. So this is some of this is give room for many small companies to start the business.
We're actually right in the middle of these kind of transitions with a lot of companies rethinking how they're going to produce on the mainland. We have Chinese companies that are rethinking where their next factory is going to be because, the useful life of a factory may only be 20 years. So they're going to build a new factory and maybe they're thinking, I have to build a new factory somewhere else and maybe I can move up the value chain in terms of technology or software or AI.
It's mostly important that you need even you are a small business provider, if you can prove your value, I think from business perspective, you can get recognized by the bigger channel and big company. They recognize your value. It's most likely you will be accepted in the ecosystem.
Absolutely. So this week on Capital Markets, I wanted to circle back to the bond market because there was a pretty big headline number this week. Foreigners own 3.6 trillion renminbi of Chinese bonds. So this is a big number because just 4 years ago, it was less than 25% of that. And we've been talking about this a long time. Why do foreigners want to own China bonds? Well, the yield is good. The growth story is good. Index companies are including Chinese bonds into their indices. So the tailwind is real. Just as a headline number, the 10-year for China right now is 315, and for the US, it's 162. The rating agencies are kind of split, but it's a similar kind of risk. So that's a great headline, and that's what everybody ran with this week. But buried just beneath that headline is a little bit troubling story, which is foreigners are not buying corporate bonds in China. Of that huge number that we gave, 3.6 trillion renminbi, only 1% of that is corporate bonds. So why is that? Well, viewers of the show are familiar with a lot of these stories. So we have lack of trust in the rating agencies, limited transparency, opaque bankruptcy regulations, liquidity, and on and on. So once those problems get flushed out, if they do, you're going to see a rush into the corporate bond space, we believe. Right now, if foreigners want access to China bonds, they're going to buy the offshore US dollar bonds. This is the Huarong story that we talked about in the past. So I just wanted to talk a little bit about this fixed income phenomenon that's going on because foreigners are definitely buying China bonds, onshore bonds as well as offshore, but onshore renminbi bonds to the tune of 3.6 trillion renminbi. That's a big number and it's a big headline. But just buried beneath that is this secondary story, which is foreigners are not buying corporate bonds because of the transparency issues.
So right now in China, really the people pay attention to the Federal Reserve. So they really want to either increase the interest rate or not. That is a big impact for the entire China bond market. Another very important thing is dollar. We know the depreciation, so renminbi appreciation. That's probably the reason people be interested in China bond market. So money is very smart. So they can flow in the. We don't need to worry too much for those money. They always flow to the profitable area.
Absolutely.
Yeah. But as we discussed in the previous video, the default right now is occurred in the China bond market. The recent, most recent default is April 30. Huhehao City, that's the water companies, they have some big default. So just a brief introduce the city investment bond background. So while the government provided the utility service to the local area, they cannot jump into the market to do it directly. And so they most of the time they start a company. Those kind of bond is similar like the mini bond in the U.S. market, but there's a lot of things totally different. So,
like the tax situation, but it's like a municipality issuing a bond. I get it.
Yeah, that's right. And that's due to the significant economy change, sector change, and the society change. Some of the areas they cannot pay for the either principal or they get a delay for the payment. There's a lot of the reason. So that really break the bond market guaranteed payment.
Right. Right. So I think this is also related. You know, money is smart, definitely. But again, we're trying to square this top-down policy with the bottom-up investment. And from a top-down perspective, we definitely know we want to. The Chinese government is trying to link the fixed income market, the yuan, the Belt and Road, the onshore commodity market. You know, there's a lot of hurdles, and you know, China is trying to thread a number of different needles here. But there is a strategy that's in place, and we're going to monitor that and keep reporting on that. And I really do believe the China fixed income market is one of the keys to that either success or relative failure.
The government, from the trading perspective, they provide a lot good improvement. Right now, we see the bond price much quicker, and they get more quote during the day, and the liquidity and also get improved.
Yeah, on the government bonds, that's definitely the case. You know, a lot of the corporate names, it's still pretty thin and still traded over WeChat or something like this.
That's right. Yeah. And but for the credit analysis, you really need to. It's really like a stock analysis. You really need to do the job by yourself.
It's harder.
Another easy way is like the manager selections work.
Yeah, I don't know if that's easy, but that's still one possible way. There's a lot of bond teams. It's hard to interview them and hard to hire them in a way that's, you know, quick and easy. You can probably hire some manager, but then you're not going to get the transparency that you may want. So there's, you know. Yeah,
previously, like the investor just thought, all right, the city investment bond, they guarantee the payment. So they don't care the risk. They just put investment. And right now, it's as long as the default risk and the pop-up, the market really become efficient. So the pricing bond will be very effective. So you will see that in the market.
Absolutely. Well, we're going to leave it there for this week. Thanks for tuning in. Appreciate all the feedback. Let us know if there's any questions or comments below, and we'll see you next week.
Thank you, guys. See you next week.